everyone? Yeah, can you see me? One sec. Hi, hi. Can you hear me, everyone? Yeah. Type yes. Good evening. Good evening. Hi, evening. Yeah. So today is the third class, third level, third lecture, right? Yeah. Chalo. Okay. Okay. Let me share the PDF also. One sec. Let me share the PDF. Those who are watching on YouTube, kindly join the batch immediately. Hi. Hi, evening, everyone. Kindly join the batch immediately. Okay. Let me upload the PDF. Yeah, it is a part of yesterday's PDF only. One sec. Batch. Now we'll see. Exchange rates. Yeah. Hi, evening. Good evening, everyone. Okay, I'll also share with you one important PDF. That is, okay, first I'll show you that. Again, then I'll share. Let me show you that PDF. Hold on. That is all the important formulae of this BFM. All the important formulae. Okay, let me share you that. Show you first that. Where is that? Exchange rates? Yeah, quick sheets. Yeah, formulae. Those who are in watching on YouTube, kindly join the batches ASAP. See this. Let me show you this. Yeah, see this. Can you see this now? Let me expand it. Quick sheet. See here, it includes BFM as well as it includes ABM also. ABM is also there. Okay, so it includes all the important formula for BFM as well as ABM. This is module A. Then we have module B. See this module B. All the formula are there. Module B. Then you have module C. Module C is not much of the numericals actually. Module C is mainly theory, but that is also important. So important parts about module C are there over here. Then you have the important PDF of this ABM also. One sec. Let me show you. See this module C. Important part is given. See here there are no tough numericals in module C. But module C consists of important theory. Module D again important theory. Okay, I'll share you with this also. Okay. Then we have ABM formulae. So these are also there, right? So all of them I'll share it now with you guys. Okay. And those who are watching on YouTube who will be joining late this batch, okay, I'll be sharing with you again after let's say 10 to 15 days. So do join the batch immediately. Okay. One sec. Look at this. See, this is the quick sheet. This is the formula which I was speaking talking of, right? So this is the sheet. Everyone download it right now. Okay, these handouts kindly download it immediately. Okay. Chalo. Now let's start with the topic. Okay. Before going ahead, let me start with some revision. Revision as such. I'm having one PDF of all the revisions. I'll be sharing with you guys later, not immediately. Okay. I'll be sharing when others also join. Right now, many of them are under that BRBL and last exam elective, right? So that's why many of them are in that mood only. So I'll be sharing this later with you. So let's do the revision first. Okay. The term, okay, can you see this first? Everyone, are you able to see this? Or let me expand this. 24. Yeah. Now this is okay. Now let's do the revision. The term foreign exchange is used to denote dash as well as the dash of one currency into another. So the term foreign exchange is used to denote what? It is used to denote. See here, I have given the answers also over here. You see the answers, they are below. Look at this. This one sec. Yeah. Buying and selling Kenyan terminal questions, then foreign exchange. One sec. All this sheet will be yours. I'll be giving you each one of you. Okay, all the sheets I'll be sharing. Okay, I'm having the answers as well of this. I think so. It's somewhere over here. Buying and selling. Yeah, authorized back office. Second, let me see. Every fourth. It was years. Yeah, this. Say this. Foreign exchange, foreign currency. Say this. Control C. So, what is the answer for the first one? The term foreign exchange is used to denote what? So it is used to denote, say this, foreign currency. Okay. And second is exchange of one currency into another. That is the meaning of foreign exchange. Foreign currency as well as exchange of one currency into another. Both of them are known as foreign exchange. The exchange rates of major currencies fluctuate every dash seconds. So they fluctuate every 4 seconds. Okay, 4 seconds. Next one, the forex markets are dynamic and round the clock markets. So is it true or false? It's quite common logic, right? So forex markets will always be dynamic, right? Yeah. Forex markets are always dynamic. Okay? Yeah. Next one, forex markets are not affected by government policies. So that is totally false, isn't it? Forex markets are definitely affected by government policies. What is happening in Pakistan now, right? What is happening in Pakistan? Hmm? Pakistan, all the policies, all the forex rate of, what is the rupee rate of Pakistan today? Pakistan rupee. Earlier, India and Pakistan's rupee was comparable, somewhat near, although they were lesser at that time also, but somewhat comparable. Now they have gone. It is around 225 rupees, Pakistani rupees. So why has this happened? What is Sri Lankan this currency now? I think so Sri Lankan rupee only they call it. What is the Sri Lankan currency? Gone. Why? Government policies. Government policies always affect the forex market. Next one, the large part of global trade forex turnover results from global commodity trade. Now, who can answer this? Let me check the answer from your side now. This third one, a large part of global commodity, total global forex turnover results from global commodity trade. So, is it true or false? Many of us feel that it is true. Global commodity, because oil is a commodity, we always feel it's true, right? But it's not that. Okay. Remember, it's not the correct answer actually over here. It is false because large part of global forex turnover does not result from commodities. Commodity is only a part of this. Okay. Yeah. It is false. Many of us feel it is true. Even I felt it was true, but it's not that. It's false. Okay. Next one. Major factors exchange. What is this? Major factors affecting exchange rates are technical, dash, and speculation. So which are these? Okay, I'll give you the answers also. What do you think should be the answer over here? Technical, and second should be what? Fundamental. Either technical or fundamental. Fundamental means what? Long term. Technical means what? Short term. See this answers over here. That's why I'm saying you are having the answers also over here. I have collected all the answers as well as the questions. This I'll be sharing it with you. Once let me mark the answers correctly. What happens is right now we have to go through this, right? So I have to go every time. I'll have to go down. What I'll do is I'll collate this properly. I'll mark it red over here, so that what happens, it becomes easier for you to watch it immediately and move fast, isn't it? That's the basic aim. So, fundamental. What do you mean by technical? What do you mean by fundamental? Technical means short term. Fundamental means long term. Okay. Yesterday, I think so, we did it. Yeah. Technical is short term, fundamental is long term, and third one is speculation. In a spot contract, settlement of funds take place on the dash working day following the date of contract. Now, this we have done it earlier also, right? Cash, Tom, spot, everything we have done. What is cash? Same day. What is Tom? Next working day. What is this third one? Spot, that T plus 2, right? And forward is next, further than that. So it is done on the second working day. That's done. If currency is costlier in forward, it is said to be at. This is important. If currency is costlier in forward, it is said to be at. What do you say? Costlier. Here, don't look at the answer. What do you think? That's important. Here, in exam, none of the things which you have learned will be of any use to you. None of the things. Okay? You will have to apply your logic. So, whenever any currency is costlier in future, it is known as this at premium. Yesterday I gave you that example of that flat, right? If I buy a flat at 30 lakhs today, and I'm feeling it will be good, it'll go to 50 lakhs, then it's at premium, isn't it? If the forward value of a currency is cheaper, it is said to be at fourth one. Now we want the fourth one. Forward value of the currency is cheaper, then it's said to be at discount, isn't it? The date of settlement of funds is known as the value date. Remember, say this date. The date of settlement of funds is known as value date. Yesterday I gave you two dates, right? The concept of dearer, which you explained yesterday. Okay, nothing here. Dearer means what? What is dearer? Okay, who is dear to you? Simple. See here, I've been asked the question of dearer. What do you? Yesterday I explained you that concept of dearer to the currency. Okay, so who is dear to you? Anyone. Who is dear to us? Remember, today's world is financial world. Everyone likes that person who earns more. Simple. Even mother father likes that son who earns more. Even wife loves that husband. That means single husband. If a wife loves the husband, if he earns more, husband loves the wife if she earns more. Everything is financial. Okay. So same thing is applied over here also. Who is dearer? The one who is at premium is dearer. Who is at premium? The one who is costlier in the future is at premium. Same thing applies, isn't it? Dearer word is is a similar word to that premium. It's that simple. Okay. So always here, your practical life examples, right? Uh, Always remember your practical life examples are applied to financial world also. In case of cross currency, how to understand the that it little confusing. Nothing. Here, whenever any currency is in premium, understand it is dearer. Whenever any currency is in discount, understand it is there is no other word to dearer, but understand it is not dearer. That's it. Okay, it's that simple. So we'll be taking that numerical. Don't worry. We'll be having that numerical today only. I think so. We'll have a numerical. So let me cover this and fast, and I'll move on to the to the second part. The rate at which the quoting party is ready to buy the currency is called as what rate? See here. At which the quoting party, always remember, buy equals to bid. Buy equals to bid. Sell equals to offer. Always remember this. Buy equals to bid. Sell equals to offer. Keep this in mind very thoroughly. Buy equals to bid. Okay. Chalo. Let's go to the slides today. Okay. Yeah. Those who are watching on YouTube, kindly join the batch ASAP. Here, only 1, 2, 3, some 2, 3 batches are there for you on YouTube. Okay. And the important topics when we start today numerical, you will see how tough it is. This is one of the simplest numerical which I'll be taking. Okay. Yesterday also I took one numerical, right? Today also I'll be taking one numerical. In every class, we take maximum types of numerical because this time I'll tell you, all those who have given BFM this time, ask them, and those who have joined the Adda classes, same case study, same, even the figures were same. The case study which I took, 2, 3 case studies which I took, 5 marks each, same case study was asked in the exam, same. You'll check that. You just check this analysis which we have done. So that's why I'm saying, follow whatever I say, whatever I give to you in the class. Don't go anywhere else. Don't follow any other book. Not required at all. Just follow what I am teaching and follow thoroughly. That's important. The forward here, I have many of you might not be knowing my credentials, means my history. I have worked in these departments. I was working with earlier, started my job from cooperative bank. In there also, I was not just like that any other banker. I was handling loans. From there, HDFC Bank. From there, Citibank. From there, Singapore, DBS, Development Bank of Singapore. And I've handled this retail. Then I've worked in corporate banking. I've worked in trade finance. Trade finance means not local trade finance. I've worked in international trade finance. I have cleared that CDCS exam. CDCS is for trade finance only, which you will be getting it now in Module A. Module A is completely about the Forex. So I've cleared all those exams. So these are all my daily activities which I used to handle. LC, bank guarantee, these were all of the daily nature to me. Means as you handle the regular transactions in your retail bank, cash clearing transfer, I used to handle this on a daily basis. Corporate finance, we used to fund around 500 crores per day per customer, around 7 to 8 customers we used to fund on a daily basis, 500 crores minimum. That was the level of finance. So that's why these things, BFM is all about that only. So I'll tell you, you just follow whatever I say, and I'll explain you the in details terms also. Whatever terms are there, I'll explain you ins and outs of those. Okay. So let's move on. Chalo. The forward premium and discount are generally based on the interest rate differentials of the two currencies involved. Demand and supply of forwards in the market. Now, what do you mean by this? See here, forward premium. Now, what I mean is, somebody had asked me just now how to decide whether this currency is dearer or premium or whatever it is. Here, how to decide? It's basically the interest rate differentials. What do you mean by interest rate differentials? Interest rate differentials means, let's say, take this is today's example only, present example. What is the interest rate in India now? Interest rate in India is around, I'll give you around it's 6.5%. 6.5. What is the interest rate in USA? USA interest rate is around, I'll tell you, around 4.5. Now they have gone higher. It's around 4. Let's consider this 4 only. Plus or minus something. Okay. So USA is presently at 4. India is at around 6.5. So what happens now? Whenever any country's interest rate is lower, that country's currency will always be higher. Remember this. Because lesser the interest rate means just lower the interest rate over here. Always remember the currency of that country will always be stronger. Why? Because it's very simple. This suppose if USA is giving FD at 4% and India is giving FD at 6.5%. So why are people investing in USA then also at lesser rate? Because they are trustworthy. More trustworthy. Now you'll say India is not trustworthy. India is. But comparatively, USA is more trustworthy. Their currency is called as the base currency of the world. Why? Because of the strength of the economy. 15 trillion economy, 15 trillion US economy. India is what? 3.5. Right? So we have to reach there. Right? So definitely, I don't say India has grown heavily. 2014, we were in 2 trillion. Now we are to 3.5, 1.5 trillion growth in 7-8 years. At this rate, if we grow, hardly in how many 10 years next, we'll be growing to around 15 trillion. We'll surpass all these countries. Okay, not our topic today. Let's stick to our topic. We are not here to discuss India's growth versus US's growth. Let's focus on BFM. Chalo. So the premium and discount are generally based on the interest rate differentials. Okay, any countries who's having the lesser interest rate will always have a stronger currency. The demand and supply depends upon the following factors. Now, there is one exception to this. What I said, any country having the lower interest rate. Japan is having the lowest interest rate, but then also its currency is weaker. Japan's currency is yen. It's weaker than that of India also. But why? Even though they have lesser interest rates, because they have deliberately kept it. Japan's government has deliberately kept their currency weaker. That's a deliberate attempt. That's why. Otherwise, if it's a market flow, if it's totally on demand and supply, any country having the lesser interest rate will have the higher, stronger currency. Okay. Move on. The demand and supply depends on the following factors: movement of capital in normal times as well as in that fright and fear. Okay, so capital movement means what? What do you mean by capital over here? Here, capital has various meanings in BFM. Okay, when I say capital account, okay, let me remove this now. When I say capital account, okay, capital account and current account, we have two accounts, capital account and current account. We always hear of these two names in basically this comes in LRS. What is this? LRS, right? That liberalized remittance scheme, right? To $2.5 lakhs, right? 2.5 lakhs can be remitted out of India. So this comes under capital and current account. Okay. So this capital account meaning and this capital is different. This capital means cash and this capital means capital account. Capital account means which I buy some property outside. Suppose if I'm having some property in USA, that means it's a capital account. But this capital means cash. Here I can read it: movement of cash in normal times as well as in out of as out of fear or freight or fright. Okay. Status of exports and imports, trade balance as also the balance of payment. Right. So basically, how strong is my export and import? Okay, how strong is my trade balance? Trade balance means what? BOT, balance of trade. Okay, and second is BOP. Yesterday I explained this, right? BOT and BOP. So how strong are they? The more my exports are, the more my exports are, remember, in the long run stronger will be my currency. The more my imports are, in the long run weaker will be my currency. Okay. Financial and financial status of the countries, freedom to invest, move in and out, infrastructure, labor position, political stability and activity. Now what do I mean by this? Here we won't waste much time on this, but I'll just explain you in short. Freedom to invest. What do you mean by this? Freedom to invest, move in and out. See here comes the important word that you'll always hear in your BFM. That is rupee convertibility. Rupee convertibility. Convertible. Okay, what do you mean by rupee convertible? I explained you yesterday, right? In balance of trade, rupee is fully convertible. In balance of payment, rupee is partially convertible. Okay. I can take any amount of order for my business from outside. I can send any amount of money outside for business. But if it's not business, then I can't send any money without asking RBI. Okay, so that's partial convertibility. So this is very important. Any country which has a fully convertible currency will always have higher cash flows with them. Okay, let's move on. In a perfect market, no restrictions of on finance and trade. The interest rate factor is the basic factor arriving at a forward rate. Okay, now what do you mean by perfect market? Perfect market means your government doesn't interfere at all. What do you mean by this? In India, let's say in India, India is a perfect market. Why India is a perfect market? Because RBI never interferes in forex rate. Never. Suppose if somebody asks you today, who decides the forex rate in India? RBI, FEDI, government, or nobody? So the answer is nobody. RBI doesn't decide, FEDI doesn't decide, government doesn't. It's only market, open market. RBI government never interferes in the dollar rate, in the rupee rate. Whereas, if you check China, China is a socialist country. Their government always interferes in the currency directly. See, here, there are two ways of interfering in any market. Okay, one is direct, second is indirect. So directly, if somebody interferes, that's called as a you did this in your, I think so, ABM, I think so, or in some other year you might have dealt with. We had that two types of economies, right? Command economy, and second one is that what market economy, capital economy. So in capital economy, there is never a direct interference of any government, any central bank in the currency. Whereas indirect this interference, it is there always. Indirect interference means what? RBI will not directly handle the forex, but what will RBI do if there is excess forex? then RBI will buy that forex so that the rate doesn't fall down. So that is perfect market. Perfect means what? No government interference. So in a perfect market with no restrictions on finance and trade, the interest rate factor is the basic factor at arriving at the forward rate. So interest rate factor, just now I explained you that USA and India. Government control is the basic factor in arriving at the forward rate. Now government controls here. Whenever we have a perfect market, government control will be at the least, lowest. If we have an imperfect market, then the government control will be the maximum. The import and export is the basic factor at arriving at the forward rate. That's obvious, right? More exports, stronger will be my currency in the long run. No? If the rate of interest, say in US for 3 months, yeah. If the rate of interest, okay, everyone is with me, or are you finding it boring? Just type yes if you are finding it okay. Okay, if you are finding it correct or you are getting some value added knowledge, just type yes. Those who are on YouTube also type yes. Otherwise, what happens? I'll go on speaking because this subject is the best subject for me. I have spent my entire life in this subject. Okay, forex, complete forex market I've handled for years together. Okay, so this all import, export, treasury, this trade finance. Once I start, I go on and on and on. So if the rate of interest, say in US or for 3 months, prime bank bills rate is 2%, while the similar paper in London can be purchased at a rate of 4%. There'll be a flow of funds from USA to London to take the advantage of the higher yields. Now, what do you mean by this? Very simple. Let's say US, UK. What is this? UK, no? This 2% is in where? USA. So USA the rate is 2% and UK the rate is 4%. Okay. So if you are an investor, forget all this BFM. If you are their investor over there, what will you do? Suppose if you are international investor, what will you do? You will do simple thing. Okay, USA 2%, UK 4%. Okay, move from USA to UK, double, simple. So funds will always move from USA to London to take advantage of the higher rates, right? So now understand there is a one typical catch in this, not in this next sentence which comes. There is a catch now. Now this is very simple to understand. You'll understand this very simply, but this you won't understand. This is very difficult. Huh? This is a question mark. Look at this. If the rate of interest, say in US for 3 months, prime bank bills is 2%, while the similar paper in London can be purchased at a rate of 4%, there will be a demand for USD in forward market. Now you'll get confused. Here, this was very simple. That if UK is giving me, London is giving me higher rate, I'll move my funds from US to UK. But what is this? This is reverse. US rate is 2%, London rate is 4%, but dollar is in demand. How can dollar be in demand? London is GBP, pounds, right? So London is pounds means what? The pound should be in demand. But here the dollar is in demand. Why? Because this is in forward market. What are we talking of? We are talking of forward market. Now, what do you mean by forward market? Let me explain it to you. Let me see if I'm having some 1 second. I'll bring some slide over here because you'll be needing information on this or logic on this. Main thing is logic, right? If I don't give you logic, just tell you to remember, rectify, then it's of no use to you, isn't it? It's that simple. Nobody likes to rectify at this age, right? Where was this? Where are we? Over here, right? So see this. What is happening now? Look at this concept. Okay. Now, presently, look at this. I'll mark it over here. Okay. This is spot. Spot means today, right? And this is what? Future, forward. Forward means let's take for 3 months. 3 months forward. Huh? Now, let's look at the problem. What is given? Spot, what is given? USA rate is 2%, right? And what that UK rate is? UK rate is 4%, right? So if you are the investor in USA, now let's say you are sitting in USA right now. USA you are in right now. You have, let's say, what, $100. Okay, $100 you are having it. Now, why 100? Let's think something big, right? You are having $10 lakh. Okay, $10 lakh you are having. Now, what will you do? Spot market, you'll say, okay, UK, this is pounds, right? Pounds. This is what? This is dollars. So you'll say, okay, what I have to do? I have to invest in UK, but UK, you'll say, sir, there is pound. So what will you do? You'll convert this dollar into pounds. 10 lakh dollars, what if I am the investor? I'll tell you what I'll do. I am the biggest uh, hedge fund. I do the biggest hedge. What will I do? US rate is 2%, UK rate is 4%. What will I do? I'll take a loan from US at 2% and invest the same loan in UK at 4%. I have to give 2% to this guy and I have to get 4% from your double, right? So what will I do? I'll take loan from USA at 2%. I'll convert this loan into what? Into pounds. Okay, whatever that rate is. Let's say generally it is 1.1 or 1.2 now. Nowadays it has gone to 1.2. So I'll convert it into pounds and invest it in UK, this 4%. So what will happen? Once this rate goes up, goes for 2% and 4% over here, 3 months bill. Huh? This is a 3 months bill. 3 months bill. Okay. 3 month FD. Why bill? Consider FD. 3 months FD. Okay. So everyone will try to invest in UK. So at that time, what will happen? This pound will be in demand because UK accepts pounds. So pound will be in demand. So what will happen now? If UK accepts pounds and pound is in demand. So in spot, what is happening? Look at spot. Spot who is in demand? Spot pound is in demand. Why? Because everyone wants pound. Pound, 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 UK, done. What will happen? Now I have invested in this UK FD. Okay, let's consider simple FD. Okay. Now I have invested in 3 months FD. Okay, for UK. But today I have invested. I know. I'm the investor. I know. After 3 months, this FD will mature. I have to get back to US again. Where am I sitting? I'm sitting in USA. So I know that I'll have to get back to USA now after 3 months. So what will I do? I'll book that contract right now only for converting that pounds to dollar after 3 months. After 3 months, I'll book that contract right now only. So what will happen now? In spot, my pound was in demand. So in forward, what is happening? Forward, this dollar is in demand. Why? Because everyone wants to go back to USA. So that is the logic behind this. See this. If the rate of interest in US for 3 months is 2% and in UK it is 4%, then in forward market USD will be in demand and in spot market pound will be in demand. Clear? Logic clear? Logic is very important here. In BFM you can't learn everything. If you try to learn this, you will go mad. This is just module A. Now module B will come. Even module A has not started properly. Module A now, I'll take this numerical now. After this, what is the time? We are having 25 minutes. We'll take one numerical. At that numerical, you'll see what the difficulty level is. Okay? So you can't remember. You can't. BFM, I'll tell you, BFM is the toughest topic. Toughest in CAIIB. Take it from me. You ask anyone. BFM is the toughest topic in CIB. Why? Because it includes everything. Forex, corporate banking, it includes everything. Now, module A, once we complete this, you'll see module B. That is a BAP of module A. Module A is nothing in front of module B. Okay? Chalo. Let's start this. 3/10/2009, your exporter customer tenders an export bill of USD 5 lakh drawn 120 days from the date of shipment. Due date is 1/2/2010. Compute the applicable rate, presuming exchange rate of 0.15%. Spot is given as 48.1415. Premium spot for January is given as 45.46. Rate to be quoted to the nearest 0.25 paise. Rupee amount to be rounded off. Applicable interest rate at 8.5% for post-shipment export up to 120 days. And commission on bills purchase is 0.0625% to be charged upfront. 5 marks numerical. Okay, remember this is a 5 marks numerical and take it from me, write it today only. You will get this numerical in exam. You will get this. Take it from me. Okay, so pay attention everyone. I won't be solving complete numerical today. Okay, Half of this will be solved. Let's see. If possible, complete, we'll solve complete. Otherwise, half of this will be solved today. Because just doing this numerical is very easy. See here, this numerical only this much. Starting from here to here, and then on the next page only this much. This much is a numerical. That's it. 5 marks. But to explain you these 5 marks, it's not that simple. So let's see how much we can complete today. Okay. So what is given? Firstly, you need to understand the logic. Okay, behind this. Let me blank slide. Okay. What is this? Yeah. What is this? 3/10/2009. Let's write down the dates first. Okay. On 3/10/2009, that exporter has come to you. Here's an export bill. Now look at this. Exporter has come with the export bill. Export means what? Export means material going out, dollar coming in. Always remember. Now tell me, those who are watching on YouTube also, or those who are watching on this in the class also, tell me, for export, which rate will we apply? Yesterday I gave you that funda, right? For export, what rate will I apply? Buy rate or sell rate? Tell me fast. Export, what rate will I apply? Buy or sell? Who can write it? Correct, Neetu. Correct. Very good. Others. What about others? Export rate, what will I apply? Buy or sell? Export. YouTube, kindly. Those who are watching on YouTube, kindly, you can also answer. Okay? Sunny, correct. Neelam, correct. Always buy, always buy. Export is always buy, import is always sell. Clear? Chalo, move on. So now what happens? This exporter comes to you on 3/10/2009 with the export bill. Export bill means what? Now again, this is a new concept to you. Remember, there are two types of finances. Okay, one is pre-shipment. Let me write it over here. One is pre-shipment, pre-shipment. You might have heard about this pre-shipment, and second is post-shipment, right? Post-shipment. There are two types. Always in exam, I'll tell you. In exam, you'll always get confused. Now, if I ask you right now only this problem, let me ask you. This problem is of pre-shipment or post-shipment finance. Who can tell me? This problem is of pre-shipment or post-shipment finance. How many of you can answer this? Let me check. Okay. This is pre or post-shipment. Pre-post means what? Before shipment, and post means after shipment. YouTube, you can also answer. It is post or pre. Correct. Aritra, you are right. Very right. Others, I want it from others. What about others? Pre or post? Okay, I'll give you a hint. Okay. Obviously, it is new to you. I've been dealing in this problem since donkey's years. Okay. So that's why. Always remember, whenever you have the word bill, it is always post-shipment. Whenever you have the word order, it is always pre-shipment. Whenever you have the word bill, it's always post-shipment. Whenever you have the word order, it's always pre-shipment. Got it? Why bill is post-shipment? Because bill means what? Bill means bill of exchange. Bill of exchange. Okay. This is one of the important document of export. Okay, and it is always given when it is post-shipment, when the shipment is done. Okay. So this is bill means bill of exchange, and whenever you have the word bill, it's document. So it is post-shipment over here, right? Submits the export bill drawn on 120 days from the date of shipment, and due date is also given 1/2/2010. Okay. So what is this now? What do we require? Compute the applicable rates. Rates are required. Okay. Yeah. Let's start. See this. Let's look at the dates. 3/10/09. Right. On this date, this guy has come to you. He has submitted the bill. And what is the due date? Due date is, I think so, on 1/2/2010, 120 days, right? So what do you mean by this? This guy has sent the goods, okay, through his ship. Send the goods, and now he has submitted the documents to you on this date. and his buyer will be paying him on 1 to 2010, means after how many days? 10 means 11, 12, 1, 2. After almost 4 months, yeah, roughly around after 4 months, this buyer will be paying him. So this bill will get closed after on 1 to 2010. So this is the last date, right? So what is given is done. Now amount is not important. Forget this 5 lakhs. Okay, we'll check it later. If something is required, we'll check it. So what is next? Compute the applicable rates assuming exchange margin of 0.15%. Here, now I'll give you a hint about this. Yesterday also I gave you, but then again I'll tell you. Whenever you are solving any forex problem, always step number one is first decide buy or sell. Buy or sell. You have to decide on that. Okay. Second, decide forward points. Forward points. Okay. Yesterday also I told you, right? Forward points. And third, you decide exchange margins. Never ever change the sequence. Okay. Exchange margin. Okay. Margin. Never ever change the sequence. Do not follow forward points first, then buy sell, then exchange margin, or exchange margin first, then forward, then buy sell. No, you have to follow buy sell first, forward points later, and exchange margin third. Now what? This problem is of export, so I'll definitely go for buy. So sell is out. So buy is this, step number one is done. Now forward points. Forward Forward points are applicable only when the problem is of forward, is of future. Now this problem is of forward or not? Yes. Why? Because on 3/10/2009 this guy has submitted the bill and it is maturing in future. The other guy is paying in future on 1 to 2010. So up to that time what? If this is an exporter to you who has come to you, he is your customer. So he'll definitely say what? Sir, this bill I'll be getting payment on in February. So up to that time what? This amount is what he'll say, sir, $5 lakh. $5 lakh. So 4 months my $5 lakh are locked. So he'll tell you, sir, pay me now. So what are you doing now? So you are actually doing a financing. You are taking the risk. So whenever you have to deal with a forward rate or future date, you have to deal in the forward points. Now look at the forward points again. Okay, what is given? Say this. Applicable rate spot is given as what? 48.1415. So what will I take? Should I take 48.14 or should I take 48.15? Who can answer me? Spot. I want spot rate now. Should I take 48.14 or should I take 48.15? Yeah. Who? Fast. 1415. What should I take? Hello. Awake? Sleepy? Yeah. All are there now? Or slept? Naina? Yeah. Correct? Aritra, you are right. So, Neelam, you are also right. 48.14, right? Buying rate. So, I'll apply this buying rate. So, 48.14 over here. 48.14. Okay. Now, what about the forward? 1 to 2010. So, what is the rate given? So, premium spot for January is given as 45.46. But we want February. What do you say, guys? This is January rate, right? And we want what? What is our date? Our date is on February 1 to 2010. February 1st date. Now I'll give you an important hint which you have to follow. Okay. Always remember in forward points, there is one concept called as buy low, sell high. Buy low, sell high. This is a maxim. This is called as a maxim. Okay. Buy low, sell high. Always you follow this in life. But there is a but to this. This is applicable when your transaction is happening between the start and end of any month. Means from the first to, let's say, whatever the date is, 30 or 31. 30 or 31. Okay, whatever the date is. So if your transaction is happening in between over here, then only you will apply this buy low, sell high. Okay. But if your transaction is happening on first date or on the last date, then you won't apply this buy low sell high. Then you won't apply this buy low sell high. Okay. So in our case, when is the transaction happening on the first of this month? So buy low sell high won't be applied over here. It won't be applied. Okay. For where it is applicable, I'll take separate numerical for that. Okay, I'll take a separate numerical. Don't worry about this. But here it won't be applicable because it is happening on the first day or the last day. So what is the rate to be taken for February now? This is February. I don't have February rate. January. Do I have a February rate? No. But what to do? In that case, always remember whatever is the end of any month is always the starting of the next month. It's like that cash in our bank, don't we have? What is my closing cash for today is the opening cash for tomorrow. It's that simple, isn't it? Whatever is my closing cash for Volt cash, whatever is my closing Volt cash for today is the opening Volt cash for tomorrow, isn't it? Same logic is over here. Whatever is my January end rate, here I'll write it over here. Whatever is my Jan end rate, Jan end will always be equal to February start rate, Feb start. So Jan end equals to Feb start. Similarly for others also. February end equals to March start. March end equals to April start. And so on and so forth. So now what am I having? I'm having the January end rate. January end rate is given as what? 45. What is this 45? Now again comes the next point. Means this is forward points. What is the rule for forward points? If it is in premium, I will add. If it is discount, I'll subtract. How to decide whether premium or discount? If my currency is 45, 46 in forward, remember in forward, I'm not talking of spot. Yesterday I told you, you can't decide currencies premium or discount in spot. It is always decided in forward. So this is the forward rate given, right? 45, 46. So whenever I am having right side bigger, my currency is in premium. So here my currency is in premium. So what will I do? I'll add this rate now. Say this. This is 45. I'll take by 45 because it is by. 46 is not required by me. So 0.45. So what will I do? I'll add this into spot. 48.14 plus 0.45. Whatever, 0.45. So it is, what is my final rate? 48.45 plus 14, 59, 59. So 48.59. These are the two rates, right? This is spot and this is 1st January. Don't apply buy low, sell high over here. Don't apply. Because this is different. You are comparing apples with oranges. You can't compare forward rate with spot rate. You can never compare. Spot rate is totally different. Forward rate is totally different. Because it's happening on the first day, so buy low, sell high will not apply over here. I'll directly apply this rate 48.59. So my rate is what? 48.59. So is this my final rates here? Up to step number 2 I have come. Step number 1 done. Step number 2 I have taken 48.59. So my final rate up to now is 48.59. But is this my final rate? No. Why? Because exchange margin is remaining. What about the exchange margin? What is given? Let's look at it. Say this. Somewhere I might have written it over here. Let's see. Okay. Yeah. Here only. What is the exchange margin given? 0.15%. So this 0.15%, I'll have to multiply it. So 0.15, have I done it over here? 48 point blah, 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 something like this. Yeah, that is a separate, okay. Yeah. Let me do it over here. 48.59 into this, okay? Into, what is that? 0.15% or 0.015? What was it? 0.15%, okay? So 0.15% over here. So I'll multiply this into 0.15 upon 100. Why? Because it's percent. So what is the answer? 48.59 into 0.15%. So do it. Everyone do it fast. What is the answer? Kelsey, if I'm having it, you also try. What is this? 48.14. Have I done something wrong over here? 14? Yeah, 48.14 is that the spot. Okay, correct. 0.078. Okay. So I won't do it now. Okay, 48 point. yeah, what was that? 0.078 you told, right? So 0.078. 0.078. So this margin, this is my exchange margin. What have I to do with this? Do I have to add this to this, add or subtract? So again, remember one logic. For exchange margin, whenever I'm buying, I'll subtract. Whenever I'm selling, I'll always add. So what am I doing now? I'm buying, so I'll subtract. So my rate will be what? 48.59 minus 0.078. Okay, so what is my answer? 48.59 minus 0.078. 72, I think so, not 78. 72 it is, right? 72. 0.072 it is. 72. So what is the answer now? 48.59. 48.59 minus 0.072. So it is 48.51. 48.51. So this is my final rate after all the calculations. Okay. See this 48.51. This is the answer we have got it over here also. Okay. So now this is half of the problem. See here, the problem over here is divided into two parts. First part is forex related. Second part is rate to be quoted near 0.25 blah blah blah. Applicable rate of interest is 8.5% on post shipment finance. So now this part, D part over here, is INR problem. We will solve it tomorrow. Okay, we will solve this second part tomorrow. That's what I said. It's not that simple. Firstly, this problem you will have to understand from the forex perspective. Forex means these three steps. What are the three steps? Buy, sell, forward points, exchange margin. Pakka. Fit it in your brain's bar. Means even if somebody awakes you at night, also you must be able to tell this. Buy, sell, forward points, and exchange margin. These three things should be very clear in your mind. So let me summarize now. Buy, sell, when it's export, it's buy. Import, sell. Forward points, premium plus discount minus exchange margin, buy plus sell minus. Simple. How to decide that premium discount? You already know. Right side bigger, premium. Left side bigger, discount. Exchange, buy, means export is always buy. So export I'll always subtract. Once you are clear in this forex, then we'll solve the INR part. That we'll be solving it tomorrow. Okay, because today it will be too heavy for you guys otherwise, isn't it? It's not that simple. First day only and you'll say, sir, what is this? I won't give CAIIB, isn't it? It shouldn't happen that, sir, I won't give CAIIB. So difficult. It's not that. Okay. So let's keep it for tomorrow. And those who are watching on YouTube, okay, join our batches immediately. Okay, how to join? I'll show you that. Chalo. Let me show you. Hold on. Here, it's very simple. So, go to Adda 20%. Have you this? Do you have all these guys that downloaded the app? Download it first. Keep it very simple first. Okay. Download the app. Okay. It's very easy. On the app, I'll tell you, you get 1% extra. That coin system is there. Okay. So click on this JIB, CIB. Okay. And then click on this November part now. See here, this, if you click on CIB this time, you'll get all that central banking and everything. Click on November. Okay. Click on November. Then you get this, what, Sankalp batch. Sankalp. Okay. This Sankalp batch, you have to click on it. You see, right now you're having that Prep 80 code. Prep 80 code, it is giving you 80% off. 80% means what? Man, 23,999 is the fees and you're getting it at 47.99, right? 80% off. It's an investment for lifetime. Don't you see here? Are you getting this point logic? See this 47.99 you are paying. You are joining this batch. You clear CIB. 47.99 in how many months will you recover? Once you clear CIB, 2 increments, right? Generally for clerical level. How many months? Hardly 4-5 months you will recover everything. Remaining everything is yours. SIP for lifetime, isn't it? So buy it now. Use the code PREP80. It's already applied over here. Click on buy now. Buy. Then don't put the code also now. It's already there. So click on continue. Put the details. All these details are over here. Okay. Don't put my details. Huh? They are shown over here. Put your details. Okay. Other you'll put my details. So put the details, click on continue, make the payment, that's it, done. So join the batches immediately, everyone. I'll be back tomorrow. Okay, we'll continue with the same problem tomorrow. Okay, chalo, bye guys, everyone, bye, best of luck, and do study, do join the batches, start studying from today only. Don't keep it for last 1 month, never ever do that. Chalo, bye from my side. Everyone okay with this? Yeah, you have got it now, everyone. Yeah. Those who are watching on YouTube, type yes in the comment section if you have understood it. All those are in the batches. Have you understood it? Type yes. Okay. Chala, bye.